Good afternoon, everyone. Thank you for joining us for today's webcast, What We're Seeing and What We Know, PPP Loan Forgiveness Application Process, Necessity Form, and Tax Treatment, presented by Rain Associates, a top 100 regional CPA and business consulting firm with offices across Ohio. My name is Imani Fields, and I'll be walking you guys through a few housekeeping items to cover. First, if you have any questions during today's presentation, you may enter them into the chat box on your screen. We will be working to respond to as many questions as we can during today's presentation. For any questions we're not able to answer during the webcast, please reach out to us at raynews@raycpa.com. We will work to respond to your email at the conclusion of today's presentation. For registering for today's webcast, you will also receive the recording of today's presentation, as well as a link to participate in a very short evaluation. Please take a few minutes to share your thoughts about the presentation as a whole, the information provided, and our presenters. Your feedback is important to us as we determine future webinar topics. Also, if you'd like a copy of today's slides, you'll find that they're available in the Handouts section of the webinar dashboard on your computer screen. Today's webcast will be given by Matt Long, Doug Hauser, and Paul McEwan. Matt Long, a principal with Rain Associates, oversees the firm's client advisory services practice. With more than 10 years of experience, Matt is committed to finding the best solutions for his clients while overseeing the execution of his team's service offerings. Paul McEwan is a principal at Rain Associates, where he leads the firm's retirement plan consulting and administration services team. He's responsible for consulting with clients on fiduciary best practices related to their qualified retirement plans. And Doug Hauser, Director of Construction and Real Estate Services at Rain Associates, is committed to building out and growing the construction and real estate services segment while continuing to ensure that they are known industry-wide. And now I'll pass it on to you, Doug.
Thanks so much, Imani, and glad to be with everyone here again with the three amigos, I guess, as we are, at least as it relates to PPP. So some of you are probably tired of hearing from us and seeing our faces, but we're going to do our best today. We want to keep this at a high level, talk about what we're hearing from an industry perspective, some interactions we've had with industry lobbyists in various sectors, and what impact that may have on pending legislation or PPP 2.0, as well as talk through some real world examples, as we've had a number of clients and prospective clients already go through the forgiveness process. A couple are already under audit or review, so we'll talk a little bit about what we're seeing in some of those. So welcome everybody, and Matt and Paul, as always, glad to have you. From here, I'll let you guys take it away.
I can jump in here. I was tasked with putting the slides together, so I'll get us started, Doug, and I'll just echo what you said. It's a pleasure and a privilege to be back on this topic again. And what we talked about in terms of the content for today was really trying to provide some perspective for everybody. And by that I mean I think it's a lot easier to understand this stuff if you go back and you know where we came from. And I know it's been a long road. You go all the way back to March 27th when the CARES Act was signed, and then the first week of April we had that mad scramble for money and the initial applications. But I thought if we could just talk through the initial loan application process, was kind of what our mindset was. This discussion here is going to connect in and kind of bring us full circle when we get to the end of the slides today, where we're talking about the Form 3509, the necessity questionnaire, as it's become known. And while that questionnaire is really meant for loans of $2 million or above, we have heard, and Doug, I think you're the one that kind of gave us the heads up on this, but we have heard that loans under $2 million that are reviewed will kind of start with this form. So while you may think it doesn't apply to you, it might. So kind of pay a little bit of attention to it. Any thoughts there, Doug, before we start?
Yeah, no, absolutely, and we'll get into that. One of the ones that I'm helping with a review process, it was a loan slightly under $1 million, and the community bank with which they worked, once the SBA picked them, they're required to do that necessity form. So
Yep. So hopefully it doesn't apply to you, but it might. So just to kind of bring it back to the end of March, beginning of April, and this is important when you start thinking about your documentation for your forgiveness, whether it's documentation that you submit as part of the forgiveness process or just documentation that you keep in your file in case you're one of the lucky loans out there that is chosen for review by the SBA and they want to dive into the necessity issue with you. In terms of the loan application process, hopefully everybody remembers there was just a ton of confusion, out there around, well, how to calculate average payroll costs. I remember that one of the hot questions of the day was, are independent contractors considered employees or not? That was a burning question at one point in time. Hopefully you all remember just the real sense of urgency around these funds. Everybody was talking about they're not going to last, so you got to get in there, get your application in there quick. Ton of controversy around that whole issue in terms of companies perhaps applying for funds that weren't eligible or didn't have a need. Remember the tumbling economy. We had no idea what COVID was going to do. All we knew was the economy was shutting down. And so that fact alone created a real sense of necessity among all of our clients, I can tell you that. And our advice was ask for the money, apply for the money first and ask questions later and answer questions later. The longer impact from COVID, we had no idea. I think heading into this, I thought, boy, we'll get through this 3 weeks, right? We'll shut down the economy for what, 3 weeks or so, and then start to open it back up. COVID will be gone. Things will get back to normal. I mean, just the idea that these initial loans were calculated on 2.5 months of, 2.5 months of payroll, kind of gave you the sense that that was probably, that was kind of the money the government thought you were going to need to get from one side of the pandemic to the other side of the pandemic. And, the whole flattening the curve, all that terminology out there. Boy, it's turned out to be a lot longer process than any of us ever imagined it would be. And then we had no idea what loan forgiveness was going to look like, right, when we started out. We knew there was going to be a form, but we didn't have a form. We knew there was not code section, but section 1106 of the CARES Act that talked about this forgiveness process that we were going to have to go through. We didn't know what that was going to look like. And starting out, it was going to be an 8-week process to spend the money, and you had to spend 75% on payroll costs. So that was all kind of what our frame of reference was when we started out. And I think it's important that you keep that in mind, particularly if you're one of these, if you're an organization that has a loan over $2 million and you're going to have to do that 3509 at some point. Whether you've received it from your banker or not, you're going to have to do that. And how you document your necessity is going to be really important, and your frame of mind, your mindset when you applied for the loan. Any comments about? Just
I thought I'd ask, get your feedback on this in perspective. There was a lot of noise up front, as Paul said, about uncertainty, and everybody had a lot of uncertainty. And now it seems like in some ways the SBA is trying to walk that back a little bit with this necessity form. How do you see the interplay from start to finish and where we're at today with that necessity form?
Well, I think, Paul's spot on. There was a lot of uncertainty with if you qualified for it or not, or if you were going to be impacted by it. And, it's very easy to look back and retrospectively think, maybe you didn't need the funds, or maybe you haven't thus far needed the funds. But it was really just a big gray area. It was very vague, and there was no definitive timeline. There was no really there was no formulaic calculation or mechanics of if you qualified or not. And so with COVID being new to everyone, you could make the argument every business should have applied because of the uncertainty piece of it.
Yeah, and I think for those, there was, of course, that initial scare when they first came out, after there was some blowback from the government because some public companies benefited, and then it was like, oh my gosh, they're going to put everybody in prison who applied for this thing and found out they didn't need the funds. Well, that's really not the case, and that has been proven out despite the ask for this necessity form, we've seen, I know we've all been involved with a number of examples, clients that received over 2 million were able to use the EZ form for forgiveness application. In other words, they didn't reduce payroll or didn't reduce FTE, and they had the loan pretty quickly forgiven. So if they were really, going after everybody in that sense, you certainly would see those not being forgiven. So I wouldn't be overly concerned with that necessity form, but it's certainly something to pay a lot of attention to.
And I think, like Paul said, just being very diligent and documenting and really explaining your thought process and the need around applying for the PPP, I think is going to be very crucial and important when filling out the necessity form. I would say don't haphazardly fill it out. Really be thoughtful and intentional in what you're putting into that form.
Absolutely. 100%.
I would say I can't say that we've talked with 100% of our clients that that form applies to at this point, but I would have to believe the majority of our clients have reached out to us and have asked us to help them go through that form and just help them identify where there might be some jeopardy in terms of potential red flags that they would want to steer clear of, where they could add some narrative that would support their necessity decision. So I do think that there's a lot of value in just talking it through with somebody who's knowledgeable.
Absolutely. Next slide, please, Imani.
So we started out with Form 3508, and we really don't want to get into a line-by-line analysis of Form 3508, but I thought it would be helpful just to let you know kind of some bullet points when we talk with clients about filling out the forgiveness application. Where do we start and what do we focus on? One of the things that we focus on is the documentation requirements. There are a number of different forms out there. We'll talk about them as we go through the slides, but each of the forms has a different amount of documentation that's required. So that's a consideration. Reference periods, if you're doing the long form, the standard form 3508, need to think about what reference period you're going to be using and how do you go through that analysis. The forgiveness reduction factors, certainly if you're doing the long form, you need to take that into consideration. We will see though, as we go through the slides, the extension of the covered period from 8 weeks to 24 weeks has really made these reduction factors for most clients. Again, it's a very facts and circumstances based thing, but I would say for most of our clients, it's made, going to 24 weeks has made these forgiveness reduction factors pretty much a moot point. But you need to think about them, particularly if you're going to fill out the long form, and that's where you've got to start, with that worksheet to Schedule A. And then compensation limits. You need to be able to adjust your gross payroll and adjust it for caps. Again, whether you're going with the 8-week or the 24-week covered period for owners and non-owners that are making more than $100,000 on an annualized basis. So just some, those are all areas that we're looking at. That's kind of where we're starting the discussion and talking through. And I would say the vast majority of our clients are fighting through this on their own with guidance from us. There are a few that have asked for our help in putting the whole thing together, soup to nuts. But most of our clients are with a little bit of guidance from us trying to tackle this. And we've been reviewing an awful lot of forms. I mean, I know Doug and Matt, you guys have been reviewing forms just like I have. And it's a lot easier for us to review something than to prepare it in terms of a time commitment. And so that's been a big help. I don't think we could have helped every one of our clients if we had to do every one of these forms. So kudos to everybody that's kind of jumped in and tackled these forms. I don't really have anything else to say on this slide. Do you, Doug?
No, I think yeah. Let's get into moving forward.
Yeah. So So the next slide was just the PPP Flexibility Act. What was the impact of that? That was signed on June 5th. And really that was the legislation that extended the 8 weeks to 24 and dropped the 75% of payroll requirement down to 60, which really that ended up not being as big a deal as everybody thought it was going to be. The big thing was going to the 24 weeks in our conversations. And then that precipitated the 3508 EZ. And what's the big thing about the 3508 EZ, and why do we really try to get clients into that if they can possibly qualify for that 3508 EZ? Well, because there are no forgiveness reduction factors. It really simplifies things, just in terms of the actual application itself. And then in terms of the eligibility criteria, we spend a lot of time talking with clients. They're nervous about, should I do the EZ form? Am I going to qualify for the EZ form or not? It boils down to essentially two criteria, assuming you have any employees at all. Were you at all shut down by government health mandates during the covered period? And if you were, then you're going to be eligible for this form. And if that doesn't apply to you, then if you kind of flew through the pandemic, the whole COVID crisis without having to lay anybody off because you were one of those fortunate industries that wasn't hurt by the pandemic, or perhaps you were even helped by the pandemic. Maybe you were a boat manufacturer, an RV manufacturer, and we all know what happened with the sales of those types of products. I mean, they've just gone through the roof, and they've flown out of the showroom floors, and nobody could have foreseen that was going to be a result of COVID. But the nice thing is those companies didn't have to lay anybody off. So essentially what the government is saying, what the SBA is saying is, hey, if you didn't have to lay anybody off, we're not going to make you go through that convoluted FTE calculation. Let's just cut to the chase. Prove to us that you spent the money on payroll or those other non-payroll costs, but primarily payroll, and we'll give you the forgiveness that you deserve. So,
yeah, and
that's PPP Flexibility Act. Go ahead, Matt.
No, I was just going to say, from a practical matter, the 24 weeks I think was critical in that the majority of our clients then could use all the funds in accordance and really use it all towards payroll, which makes the forgiveness piece of it even easier, because now we're not breaking out utilities, we're not breaking out certain other eligible expenses. It's a lot more matter of fact with just the payroll reports having to be provided, and I think that it's a lot less, a lot more black and white, because it's easy to document versus any kind of funny business. And to take a step back, I think also from a practical matter, the first step in looking at for forgiveness is looking and saying, which form am I able to use? And Paul, I know you'll get into the 3508S. But you basically have three options. You have the EZ form, you have the one under 50,000, and then you have the long form. And looking to see what form you can use to make this as seamless and easy as possible is kind of step one in all of this.
Yes, yeah, and it's funny. You're right. The Flexibility Act really did create a lot of simplification. I don't think I had any appreciation at the time in terms of what the fallout was going to be from that. But as we worked through the forms with clients and we could get them into the EZ form, boy, the anxiety level just came down tremendously once you realize, okay, you mean I don't have to have copies of all these invoices for all these non-payroll costs? And wow, because we went to 24 weeks, we have way more payroll than we really needed. And so we're going to get full forgiveness just based on payroll. And now, even if we have to do the long form on a 24-week basis, even after we have a reduction factor, because we had to lay some folks off and we had a decrease in our FTEs, that's not, once we go net all that stuff out, we're still way over the loan amount. And so we're going to get 100% forgiveness on that loan. And that really brought the anxiety level down a lot.
Yeah, it did, just looking at the mechanics of the initial application, I mean, the 24 weeks really sets up these businesses in order to use it all strictly for payroll. And I also don't want to discount you know, with being government mandated to be shut down, the ability to now use the EZ form. I mean, all of the industries that impacts between restaurants and barbershops and hair salons, looking at all of the non-essential businesses that were required to be shut down. You know, they essentially, you look at dental practices and the like, and if they were shut down, even if it was 2 weeks, they qualify for this form now. And so I don't want to underestimate the importance of that too, and how that can really help with using the EZ form.
Yeah, I would agree, Matt. And with that, we got a number of questions coming in already about forgiveness itself and the commitment for that. So let's get into the meat of that, because I think that's what a lot of people want to talk about. So next slide, please, Imani. And on that, just to clarify, one of the things we want to say as we talk about this necessity form, which we'll get into here momentarily, initially that is required only for recipients greater than 2 million. But again, it's something everybody, even if you receive less than 2 million in PPP funds, should familiarize themselves with, because you may, in fact, be required to do that form if the bank so deems it, and if the SBA picks you for audit or review. So those forms went directly to the banks. They did not go directly to the borrowers. At least I have not seen that to my knowledge.
No,
so
that's correct.
Talk to your banker about that. Some have been pushing those out, which we'll get to. Some have been holding off. So it depends on your institution to a large degree.
Hey, Doug.
Yes.
You, in previous webinars on this topic, you were pretty eloquent, I thought, about what borrowers should be thinking about in terms of contemporaneous notes, memorandums to the file, in terms of their mindset, and how that kind of plays into the necessity form. Since you brought up the form, I just, well, it was on my mind, I just thought I'd ask the question. You want to kind of go through, even if folks are under 2 million, I mean, I think it's worth adding the file, so to speak, and having that information there ready to go in case you need it.
Yeah, absolutely. You know, that it's having been through a number of bank loan review processes and things like that, I can speak a little bit to how the SBA and banks will look at this stuff. So our advice is over document, keep a living audit file, you know, put in there the memos related to management meetings, board meetings, emails, the thought process at the time you applied for the PPP and what was going through your mind as a manager in your in that kind of March timeframe. Document all that stuff. Keep it in there, even if the bank is not and the SBA are not asking for it right now. Keep in mind there is a 6-year time horizon during which they can come back and ask you for information, in other words, for audit or review. So keep that sort of as a living file. Don't just, you know, throw it all in there and forget about it. Try to make sure that at least once per year you have some type of management review of that file and just document that, put it in there. Even go so far as to pick out things like financial projections that you had done pre-COVID or year-over-year results. These are the kinds of things that they may come back and look for. I know companies are even going back and taking a look at financial results during the Great Recession and saying, well, geez, we thought maybe this kind of thing might happen. So this is what we were thinking at the time. So you cannot over document really enough in terms of what's there. Hopefully you never need all of that information, but in a couple of the instances where we've seen folks come back and they have been picked for audit or review, they've been asking for more extensive information. And I can tell you that those that are prepared and can provide that are certainly much better off at the end of the day. So hopefully that deals with that. But get into the Form 3508S here real quickly, and then get into some of the accounting and tax treatment.
Yep, I think we can cut to this real quick. There has think somebody muted me there. Am I on mute? Can you hear me now? Okay.
Yes, you're unmuted.
Thank you. So the 3508S, a little bit of confusion, I think I've identified, at least in working with clients coming from the banks. I think there was a little bit of a misnomer that this was automatic forgiveness that we couldn't get in legislative format, that we were getting in a regulatory format. It really isn't that. I know the banks were quite adamant with SBA about needing to simplify this process. And the 3508S was kind of the best way that SBA could address that without getting legislation from Congress in terms of an automatic forgiveness provision or legislation. But it doesn't come even close to automatic forgiveness. So essentially what they said was, we'll take the 3508EZ, and for any loans under $50,000, we're going to kind of waive those criteria that were there before. And so if your loan is under 50,000, we're going to let you do essentially the 3508EZ. You still have to document your payroll costs or your non-payroll costs. So it isn't automatic forgiveness. You know, what we were talking about, what we're hoping to get ultimately is automatic forgiveness for loans up to about 150,000. And in that situation, you would really only have to fill out and certify that you spent the money that in the way that you were supposed to, and not have to provide any additional documentation. This 3508S is not like that. You still have to document your, I said 1106 expenses. That's just a reference to code section 1106 in the CARES Act. And those could be payroll or non-payroll expenses. The nice thing about the form, just like on the S, just like on the EZ, is there's no forgiveness reduction criteria. So you don't have to go through that process. But it isn't quite the automatic forgiveness that everybody thought it was when it originally came out. So if you qualify for it, it's great. The other thing I would say, and Doug and Matt, I don't know if you've been seeing this, but the bank, a lot of the clients that I've been working with loans under 50,000, the banks have really been pushing them. Well, I'll just say any borrowers with loans that qualify for the 3508S, they've been really pushing them to do these forms and get them submitted, which was kind of contrary to advice that we were giving, right? That talked about, well, why don't you wait and see if we get this automatic forgiveness? Because there still is no rush. There's no sense of urgency in getting these forgiveness applications filed. So there was a little bit of confusion there. So some of our clients did go to the trouble of filling them out, just kind of because the banks were pushing them along a little bit. But Doug and Matt, I don't know if you had that same experience or not, but that was definitely something I experienced.
Well, I would tell you the banks don't want anything to do with this damn program right now. So they're trying to get all of it done. They got paid their fees, remember? They don't want to be left with any of these residual loans, which is another issue. If somebody got an EIDL grant, that $10,000 grant is supposed to be deducted from your forgiveness amount. The last thing a bank wants is a $10,000 2-year loan at 1% sitting on their books. So trust me, there's going to be a huge market out there for some private equity funds. I know there already are, to try to buy up that, let's call it stuff, at a discount. So there's a lot more to come out of this. It's just, we'll see.
Yeah, and I think, going back to this Form S, I think, you've hit on it several times here. There is no automatic forgiveness. Doesn't matter which form you use. And at this point, based off the legislation that's wrote, there is no automatic forgiveness. I think, from a practical matter, this 3508S, Form S, in my mind, applies to quite a few, mainly these Schedule Cs that do not have wages, that are sole business owners with no wages, and because it was capped to begin with at the $100,000 limit anyways of self-employment without wage. For me, this form here is mainly tailored to them.
Yeah, with that, guys, get into I know that the big topics that I keep getting pinged here: tax treatment, and PPP 2.0. So let's get to the
Hey,
elephant.
Doug, we gotta save the good stuff for last. We don't want anybody leaving us, right? So
Right, exactly. So and go ahead, Mike, you can advance the slides. But what I'll say quickly on before we get too much into this, that from a tax treatment, because I know there's some people that have to jump off here, but the IRS has ruled over and over several times, and we'll get into this, but as of now, this is going to be a 2020 event in almost every case for taxpayers. And what the ruling states is that the forgiven loan amount is not taxable income, as normally a forgiven loan would be. So that was nice. However, they kind of backdoored the whole thing and then said all the related expenses, however, are not deductible for tax purposes. So there is indeed a tax impact. And we have some side bets among the three of us here. We'll talk about that in a little bit as to whether that's going to change or not. We shall see. But I know there are some people really paying for that. So I just wanted to address that real quickly. Loan forgiveness process. What have you guys been seeing with client assistance on this stuff so far?
Yeah, we don't need to spend a whole lot of time on this, but it's been confusing, and another point of confusion for clients. Generally speaking, the larger banks are all going to have portals. So we've been helping clients with the loan forgiveness application process. If they're with a community bank or a smaller bank, typically they're accepting paper forms. So it's a relatively simple, user-friendly process for the borrower. If you're with a larger bank, they've got a portal. So you've got to go, you got to get your PIN and your username, and you got to get set up for the portal. And then you've got to get all your information organized before you log in so that you can kind of do it in one sitting, ideally. It's a two-step process. I think I talk to clients about this all the time, and there seems to be some lack of information out there, but the two-step process is this: you apply for forgiveness as the borrower to the bank, but that's not the end of it. And of course, the bank then reviews your application, makes a determination that you've provided the requisite documentation, and then they pivot, and then they have to send all the information to SBA. So it's kind of a two-step application process. You don't get forgiveness until the SBA sends the funds to the bank to pay off your loan, at which point your banker then comes back to you and says, okay, SBA has sent us the money, and you're off the hook.
And Paul, do you want to maybe touch on timing of when you submit it to the bank, when the bank's required to turn it around versus the SBA?
Yeah, go ahead, Matt. Do you want to talk about that?
Essentially, and I believe it's what the bank has, is it 30 days then to
60. Yeah,
60 days to review and approve, and the SBA that has 90. So, you essentially, once you've submitted for approval, a determination has to be made whether that was approved or not within, the 5 months, essentially.
Yep.
I can say that after some initial backlog, the SBA has been moving quickly on some of these. In recent weeks, I know from clients and talking to some bankers that some of these have been turned around by the SBA in a matter of days, couple of days.
Yep.
And talking some
small loans, especially the small loans, Doug.
Yeah, smaller ones for sure, but I've even seen a couple larger ones that have turned around in a couple of days.
Is that right?
So
that's great.
They are catching up. Next slide.
If you can go back real quick, I threw some stats down there, but that goes back to 11/22. That's the most recent information we have. So to Doug's point, it looks like things are picking up. So both from a forgiveness perspective as well as a bank review perspective. Okay, I'm sorry. Go ahead now.
No, go ahead. This is where the part of the matter comes for the tax treatment here.
Yep. And so title of this slide is Uncertainty Remains, and that's certainly true. We've been hoping for and predicting that we would get both automatic forgiveness, which is the first bullet point, and tax deductibility, which is the second bullet point. in the way of legislation, which everybody has been predicting would be attached with or buried in the next stimulus bill, which has been, that can has been kicked down the road repeatedly. Right now, it looks like there's a gang of 8 Senate proposal. 8 moderate senators came together a couple of weeks ago and proposed a kind of middle of the road size bill at $908 billion. And I think there's a lot of things politically that have conspired to kind of put some wind behind the sail of this particular piece of legislation. So it does look like it's moving forward. I was on the PPP town hall with the AICPA last Thursday, and their legislative expert, the lobbyist, is really hopeful that this is going to be passed before Christmas. I'm not going to make that guarantee, but I am optimistic, Doug. And I know you take a different position on it, but I am optimistic. And it includes, this gang of 8 proposal does include the $150,000 automatic forgiveness, as well as tax deductibility. And Congress, I think certainly it's not even debatable really, but Congress intended these loans not to have a tax impact, and the IRS position has kind of nullified that. And so unless we get this legislation, these things are going to have a tax impact that wasn't really intended. And it's kind of, I wouldn't have predicted it would go this way. Doug, I'll let you talk about McConnell's response down there, because I know that was your input, and that's coming from your banking sources and just different sources than I've got. So
yeah, the interesting part about that was, this gang of 8, this moderate proposal seemed like it was gaining some traction, and then Senate Majority Leader McConnell and some of his more conservative cohorts quickly put a stop to that and said they would not pass it in that form. His counter proposal provision draft bill does not include the provision to change the current IRS tax treatment. And I know Secretary Mnuchin is on record as saying, quote, over his dead body, will they change the current IRS position on that? So where that falls, who knows? I agree with you, Paul, that the intent of Congress initially, and certainly of any of the moderate politicians, was that this would not have a tax impact for recipients. However, the conservative wing of Congress seems to be adamantly opposed to changing this IRS treatment. For what reason, I do not know, other than perhaps cost. If you think about it, it adds 1/3 to the cost, roughly, of the PPP funds. So I don't know. Matt, what are your thoughts? You're dialed into some of the hospitality industry and all that. What's the scuttlebutt there?
Well, I think my thoughts are it's a who knows type scenario right now. It certainly was intended that there would not be adverse tax consequences here. And my fear is that a lot of these businesses that received this PPP funding had used the funds in accordance, but did not hold any kind of reserves to foot any kind of tax with this. And so they could really put a lot of businesses, put them under if this truly is going to be taxable. And that's a scary proposition there. And, there's a lot of lobbying going on in a lot of industries. But at this point, it's just a wait and see type approach, because I don't think, we can all speculate. But as of right now, on the letter of the law right now, it is not deductible.
Yeah, and we're getting some questions here when we say 1106 expenses are not deductible. That is correct. The IRS current stance is that those normal expenses, those typically payroll, as we've outlined, which were most of what PPP funds were used for, cannot be deducted for income tax purposes. So that is the current stance of Treasury and the IRS. Now, this differs greatly. I should point out, we've gotten a couple of questions too on the accounting treatment. Now, from an accounting perspective, of course, from a GAAP perspective, if it is reasonably assured that your loan will be forgiven, then what we are suggesting, and most of the industry is suggesting, is that that forgiven loan amount, or reasonably anticipated to be forgiven loan amount, would be treated as grant revenue in 2020. And obviously those expenses are recognized as they typically would be for expenses. So as you can note, then that creates a significant difference in what your GAAP financials would look like versus your income tax return. Because again, for tax purposes, that forgiven loan amount is not included as taxable income, and yet those related expenses are not deductible. So it does look different from a GAAP versus tax perspective. That does have a lot of impact potentially on bank covenants, if you have cash flow recapture provisions, other things like that. So make sure you're having those conversations with your lender, with your CPA, and et cetera, because all of those things can have an impact. But ultimately, this is intended, and I think most people are trying to treat it as a 2020 event. That's what it seems to be everybody is moving towards here.
Yeah, I just wanted to make that point. You made that point earlier, Doug, but I just want to hammer it home. It's on the slide here, but you know, we got guidance from the IRS, because before we were uncertain as to what year would we not have the deductibility, right? 20 or 21. And we got pretty clear guidance that basically says if you're expecting to get forgiveness, it's going to be a 2020 event, just as you said, Doug. So
yeah, and we keep getting that question pinged in here. So how can these expenses be non-deductible before forgiveness is technically issued? Well, that's what the IRS said. So it's not our policy. We don't necessarily agree with it, but they've been adamant that that's how they expect this to be treated at this point. So
yeah, and I was just going to hammer that same point home, is that it's really, if it's expected, is really when you're going to pick it up. And to clarify earlier about these 1106 expenses, you know, like Doug mentioned earlier, essentially we're saying the income from the PPP is not taxable, but we're also saying the expenses are not taxable, and thus essentially you're picking up the income.
right, correct. And we get this question too, which I tend to chuckle. You know, some people are saying, well, gosh, why don't I just not seek forgiveness, and then it's a 1% loan? Well, keep in mind, if you do that, I mean, this PPP money, if you seek forgiveness, okay, maybe it's not 100% free money. It turns out, depending on your marginal tax rate, maybe it's only 70% free money. It's still 70% free money. So everybody out there, don't get too panicked about that. It's better than not seeking forgiveness at all and treating it as a loan. So you know, let's not overthink it either.
And from a tax return standpoint, we're thinking it's going to be treated as an M1 item. So basically a book to tax difference.
Yep. All right, next slide. Let's get into some of the what we're hearing about 2.0. Paul, you want to lead us off here?
I can run through this slide, and then you guys can comment. Right now, this is more information from the Gang of Eight proposal, but I think regardless of whether it's the McConnell proposal or the Gang of Eight proposal, we're looking at a PPP 2.0. It's been kind of part of the legislation all the way through the process, even though we can't seem to get it passed and signed. But they're thinking it's going to be about 288 billion of the 908 billion. It's going to be allocated to essentially PPP 2.0, and we're thinking it's going to be a similar framework to the current PPP program in terms of, you know, how are we going to calculate the loan amount? We don't know if it's going to be 2.5 months of payroll. Maybe it will be. Maybe it'll be a different number, but it'll be somewhat related to your payroll costs in terms of the calculation, and there'll be a covered period. So it'll be kind of those similar frameworks in terms of the current PPP program. What's a little bit different is it's going to be very much, because now we've got the benefit of 2020 hindsight. We know how we've been impacted as companies and industries. So the government really wants to target this money to businesses that are struggling. So you're gonna have to be able to document a 25, at this point, we think, and we don't know what the actual percentage is going to be at this point, but something like a 25 to 35% reduction in revenue. I have no idea what time frame that's going to be, but I'm sure it'll be just, it'll be defined. But you're going to have to document that you've had that reduction in revenue, and it's targeted to smaller businesses. So if you remember the original PPP loans, it was 500 employees or less as kind of the definition of a small business. Here we think it's going to be really targeted to even smaller businesses with 300 or fewer employees. So some different eligibility requirements just around PPP 2.0, really trying to target the money where it's needed the most. Again, application process it'll happen pretty quickly. There's going to be this concept of limited funds. So what we're telling everybody is be prepared, be ready to go. We'll push the information out as soon as we have it, and we'll share it with you, and we'll push it out internally, and our principals and managers will push it out to our clients as quickly as possible. And I'm sure we'll have some emails and things like that will be going out as well.
Matt, what are you hearing from an industry perspective on any details at this point?
Well, I know the hospitality industry is really, they're just awaiting any day for something to get passed here, and they're really trying to stay on top of it. There was some confusion early on with some of my clients. They're saying, well, this Gang of 8 proposal was for 900 billion. This PPP is less than 300. Where's that other money? And it's for other relief, and not payroll protection program related. The 300 or less employees kind of scares me, because there are certainly a lot of companies and a lot of industries that have greater than 300 employees that are struggling. So I'm hoping to see some revision there before any kind of final bill is passed. And the other thing I think that's important is looking at, this is going to be very similar, at least from what we understand, where the banks are the gatekeepers again. And so we'll be working through the banks and the institutions here, and it's not going to be treated as a grant. This is going to be very similar from a mechanical standpoint as the first go around, just very much more targeted to specific industries.
Paul or Matt, what are you hearing though about eligibility in 2.0? If you already got 1.0, or is it going to be separate or distinct? Obviously, we don't know yet, but any rumblings that either of you are hearing on that end?
Everything I'm hearing is there is nothing that will disqualify you from receiving initial funding from 1.0 versus 2.0. Again, I don't think there's been anything definitive, but everything I'm hearing is saying one will not exclude you from the other.
Yeah, I would agree with that.
Yeah, and a couple of the questions we're getting here as we'll talk about some of the reviews and audits and things too. People are saying, why don't they just fix 1.0, fix the tax issue with 1.0? Well, here's the thing.
I agree.
Well, for simplicity, you would say yes, but here's the thing people forget. This is a political issue. It's all about optics. There's a lot of blowback that companies that quote unquote never ended up needing the funds, even though we all had all this uncertainty, didn't end up needing the funds. And construction is a big industry that has continued to perform well, et cetera. And you'd say, well, gosh, they didn't need them because it's been okay. However, so the government doesn't want to reward these companies that quote unquote didn't end up needing those funds again. The optics of it don't play well. And you've seen a lot of this in the paper as Freedom of Information Act stuff has come out. They're starting to publish the names of the larger PPP recipients. Look, as the program was designed, everybody that I'm aware of, did this for the right reasons and did it fairly. Remember, the whole intent, and Paul, you said this very eloquently up front, whole intent was for the government to allow companies to keep people on the payroll. So companies that ended up performing okay and their business remained okay, it did exactly what it was intended to do. But however, the optics after the fact look really bad. Somebody decided, or some politicians have decided. So that's why I think this thing is going to change significantly and morph into this kind of 2.0. And they don't want to fix the the tax issue, even though yes, that would be simpler, but hey, this is Washington. They're not going to do what's simple. They're going to do what makes them look good. And what makes them look good is, doing this micro targeting towards businesses that, hey, we can prove they really suffered and they're much smaller in scope. And that's how we're going to make this play. Again, that's just my opinion, but that's a lot of what I see out there and hearing from lobbyists and other industry experts. So sorry, that's
yeah. The comment I'll make there is I wish they would just really simplify this and just treat it as true bailout or grants, right? But I do want to mention that, our offices are in Ohio. Most of our clients and probably most on this webinar are based in Ohio. There's been some really nice relief specific to Ohio with some really nice grants out there. Now there is some eligibility requirements there, but there are still funds available in some of these programs. So I would strongly encourage you to look into those as well if you have not thus far.
Yeah, absolutely. Go ahead, Paul.
I was just going to say the last item on this slide is reviews and audits, and I think you're the one that's had the most experience working with clients that have gotten to that point.
Yeah, so because in some a lot of the construction companies tried to get this done and out of the way quickly. They wanted it recognized. Cash flow was still good, so they thought, well, I'll go ahead and deal with the tax impact sooner rather than later. Got a couple that have been chosen for review that I'm helping with. One is over that 2 million threshold, and under which they said all of those would be reviewed. We'll see. And some one is under that threshold. And so far it's just been requests for additional information. No hint of any issue with the SBA. I think ultimately, as I think through what the SBA is tasked with here, they're very limited in terms of the number of auditors they have and all that. They're looking for really bad actors and true malfeasance, folks that fabricated operating entities, didn't really have payroll. And I say that because one of the first things they ask for is a prior year tax return when they've looked at these. So that tells me they're trying to see, hey, was this business really in operation in the prior year? And did they, truly have a valid reason to apply for this? So more to come on that, we'll see. But I think that's really what they're after, is the malfeasance. It's very obvious.
Matt, all right, let's talk just real quick, Matt. Can you talk on that second bullet point? For most borrowers, wait and see is still the best approach to filing for 2020. You've mentioned wait and see a couple times in your comments. Just in terms of when the tax return, how quickly are we going to look to get the tax return filed? Are we going to extend? Are you having those conversations with clients? I mean, I assume you are, and it sounds like we're trying to wait as long as we possibly can to see if we can get this deductibility issue resolved before filing.
Yeah, and so obviously we're hoping to hear something before the end of this year. I don't know if we will or not, but I certainly think we'll have some kind of clarity one way or the other before these tax returns are due. And while there is a misconception that there's an urgency to apply for forgiveness, and I can understand the anxiety and wanting to get it off your books, you have 10 months from when the funds were used to get this actually applied and forgiven for. And so there's certainly and definitely time available still. And from what we're doing with a lot of our clients is, from a tax planning perspective, we're running multiple scenarios with and without, and with kind of taking the conservative approach that it will be non-deductible and will be picked up as income for now as we're doing planning. The reality is for most of our clients, we're probably going to prepare the returns, even if they've applied for forgiveness and it's in limbo, or if they haven't applied for forgiveness yet. And we're not going to file any of these returns, even if we have the ability to file on February 1st. If we don't have answers, we're probably going to sit on those returns and just wait. And so, what we don't want to do is prepare these returns, file these returns, and then have to go back and amend, or have to look at additional compliance or additional time spent in getting all of this kind of rectified. Instead, that's why I'm kind of recommending still taking the wait and see approach, because I don't think it can hurt in any situation outside of if you have other bank covenants or banking requirements to really push to get it off your books.
There are some questions that we're getting about, hey, should I just wait till 2021? Ultimately, as Matt said, you do have 10 months from the end of your cover period to apply. However, the IRS has been very clear that this is a 2020 tax event. Whether or not you've actually applied for forgiveness doesn't really matter. If it can be reasonably assumed that you will receive forgiveness, it's a 2020 event. So keep that in mind as you think through all of this.
Yeah, and I think when you're, again, and I think I hit on this earlier, but when you're looking at the actual 3508 form or 3508EZ, really try to focus on payroll expenses, because I think that'll really keep things cleaner, be a lot easier to support, with additional documentation, and really, if you were to get chosen for a review, make it a lot more streamlined and a lot easier.
Absolutely. Well, with that, we want to get to maybe the last slide or two here and then start taking some questions.
I think this is the last slide, Doug, and we've already covered a lot of this. We kind of front loaded this discussion because the conversation just kind of naturally went that way. But again, this is what the 3509, the 3510 is the equivalent for nonprofits. So if any nonprofits are listening in today and you got a loan that was over a PPP loan that was over 2 million, the 3510 would be the applicable form for you. And the way these forms are laid out is two parts. The first part focuses on your business activity, and they're looking at actual revenue, primarily Q2 of 2020 compared to Q2 of 2019. So they want to know what's the actual revenue impact of COVID on your business. And then the second part is focused on liquidity. So what were your financial resources at the time you made the decision to apply for the loan? And again, it's just collecting information. It's really a black and white. It's not I wouldn't say it's a really complicated form. Where we think there's a lot of opportunity with these forms is there are several text boxes. There's actually more than two, but several text boxes where you can kind of explain your facts and circumstances and attach additional documentation to explain and provide documentation of kind of I'll say cash flow projections, kind of what was happening with some of your major customers. What was real time information when you were trying to decide whether it was the right thing or not to apply for this loan. Some businesses are very payroll heavy, others are not payroll heavy. If you're in a payroll heavy business, how long could you have continued to make payroll without having to make cuts if the economy had really tanked or your industry had really tanked? All of those things are extremely relevant to the decision to apply for the loan, and there are opportunities on this form to document all of that stuff up front. I think we've made that point earlier, and I just want to make sure we make that point again. Doug, I think you said the form's to me, this is one of my biggest disappointments from SBA is the way this was kind of slid out into the marketplace. Even now, it's not available on the SBA website. You have to kind of Google it, and you can find sample forms out there, but not in any official capacity, which is really frustrating. I guess technically the reason is OMB is still reviewing the form to make sure it doesn't need to be changed from a Paperwork Reduction Act perspective, which seems really odd because all the other forms are out there and they all have the same requirements. So anyway, it's just really frustrating. It was slipped out and circulated in the lender community. Some lenders decided to share the information with their clients. Other lenders said, no, it's premature to do that. So it was just it was a messy hodgepodge of information and lack of information out there for the longest time period. Doug, I don't know if you have any, you have connections with
it's crazy because they sort of, as you said, stealthily put this form out there on night, not really telling anybody. Yet some banks pushed it out right away because there's a requirement in the form. It has to be done within 10 business days of them receiving it. So they pushed it out to the specific recipients right away. Other banks sat on it and still are sitting on it and haven't gotten it to those clients. So I guess the lesson here in all this is really make sure you're communicating with your lender as to what they want, when they want it, and be prepared that you will have to do this form if certainly your loan was in excess of 2 million. If your loan was under 2 million, certainly take a look at it, and as we've suggested, make sure you document things that would be required under this so you've got them if indeed it is necessary at some point.
There has been a lot of pushback from the business community. AICPA has been spearheading a lot of that effort. And it's focused around just fairness issues. Everybody seems to be very upset with this 10 business day turnaround time on the questionnaire. It just seems really punitive. And none of, there really is no quick turnaround or quick deadline in terms of the forgiveness application. So this kind of flies in the face of it. It kind of goes from one extreme to the other extreme, and it's jarring to the business community, and it makes the business community suspicious of what the intent of the form is. So a lot of concerns are just around the 10 business day requirement. Nobody likes the comparison, the kind of the 2020 hindsight look back in terms of the revenue, when you didn't know what your revenue was going to be when you applied for the loan. So that doesn't seem to be fair, that you would be judging the necessity based on known quantities now, known factors now that were not known when you applied for the loan. So that doesn't seem to be very fair. And again, we talked about attaching the narrative statement. So actually what I meant here in this bullet point is AICPA is suggesting, rather than having a form with a bunch of required documentation, numbers from your financial statements, et cetera, and then adding in some narrative, why don't we just get rid of the 3509 and 3510 and just ask for a narrative? What was your situation? Tell us what your situation was when you applied for the loan. Why do you think you needed the loan? And let's just leave it at that. That would have been a much softer approach, according to AICPA. So that's their recommendation. And ultimately, the last bullet point there is cooling effect on PPP 2.0. That is what the business community is most concerned about. Is if we make it, if we make it seem like everybody's getting punished because they applied for these loans, and denying deductibility, et cetera, really ramping up the pressure on the necessity questionnaire. Who's going to apply for PPP 2.0? Who in their right mind is going to apply for more money with more strings attached down the road? And is that really in the best interest of the economy? So nobody wants that. Everybody wants the money to be used and to get out into the economy to get us through the rest of this financial crisis. But I think that was all we had. Yeah. Any questions there, Doug? That I know you've been monitoring questions as they come in. Is there anything we haven't really addressed?
Yeah, it just we got some questions here. Can I use the easy form for the 24-week period? Yes, absolutely. Yes. Again, as Matt suggested, one of the things we're advising clients, since they expanded it, everybody is assumed to now be in the 24-week covered period. You actually have to opt in. If you're not going to do that, you have to opt in to a different period, either the 8-week or some customized period. So it's easiest just to use a 24-week period. Use it all for payroll if you could. Like Matt said, don't mess with utilities, don't mess with rent, related party rent, all those things. Don't give them any further information than is necessary in terms of, that stuff they don't need to be crawling into. If you document it correctly, have it all related to payroll, it makes it easy, should go very smoothly, and you shouldn't have any concerns. I don't know if either of you guys want to address this. We have a question here. What if it crosses over 2 fiscal years in terms of the covered period? That's a bit of an unusual situation. Any thoughts there?
I think that would be an unusual situation, and I don't think we have the guidance we need to answer that question. So that remains part of the uncertainty out there. Matt, are you aware of anything I'm not aware of?
No, I'm not. You know, my gut says that shouldn't change anything. But you know, I haven't come across that in any specific situation.
I would say all the clients I've worked with to this point, the covered period falls within 2020, so it's
Right.
not been an issue.
Yeah, and I guess the only place I could come into a potential impact would be if you're, you know, say you had a 731 or 831 year
Sure.
from a tax purpose, for tax purposes, that,
Yeah.
you know, there would be some impact there. So, you know, get with your tax provider and make sure you're having those conversations. You know, the liquidity test, we're getting a lot of questions here about the liquidity and the necessity form. What are your thoughts, Matt and Paul, each on liquidity going back to the original period and how that may impact what they're looking at?
You want to go first, Matt?
Well, you know, I'm probably going to have more input here than I would. I would say that, you know, I mean, you're going to document what you had. You know, I mean, you're going to show them the financials. You're going to provide to them what the situation was at the time. I go back to, you know, it's easy to look at hindsight and retrospectively look at did you have access to other sourcing of funds? Well, you know, potentially you did, but maybe you didn't pursue those, and who knows if you would have actually qualified for those other funds or had other means.
Yeah, I think this is the liquidity issue in general, Doug, I think is going to be quite favorable for the vast majority of our clients. And why do I say that? I say that because they're not public companies, right? So I think if you don't have access to public markets in terms of capital, that is primarily, you referenced optics before, Doug. I think the cases that have been in the Wall Street Journal, they've all been public companies, you know, or cases where it's just been outright fraud, right? So either there's outright fraud or there's this perception that, hey, you're a public company, you shouldn't have been eligible for this. The fact of the matter was they were eligible based on the criteria. So they applied and they got the loans, but then the optics looked bad. So now we have all of these necessity questionnaires. But the liquidity portion really it wants to know what was your cash position, what was your liquid position, you know, prior to applying for the loan. I would say the vast majority of our clients, you know, they're not sitting on a ton of cash, right? Cash is flowing in and flowing out on a constant basis. So the fact, you know, it's not like you were stockpiling cash waiting for this pandemic to occur, right? It all happened really quickly. So that typically isn't an issue, especially when you look at somebody's cash position compared to what their ongoing payroll costs typically are. And that, again, that was the whole point of the program, was to keep people on payroll. And a lot of the questions under the liquidity section have to do with access to public capital markets, you know, or were you owned by a large, are you a subsidiary of a larger entity, and could you have accessed cash through that other entity? That doesn't typically apply to most of our clients. So this entire necessity questionnaire really is going to be an overall facts and circumstances thing. And so don't be discouraged as you go through that and you have to answer something that you feel is a negative on there. For example, one of the questions is, were any employees or owners that make more than $250,000 compensated in excess of that amount during the covered period? You know, answer the question truthfully. That isn't going to be determinative. That's just one factor. And I would say, by and large, for most small businesses, at the end of the day, once you get through that form, answer it truthfully, add in your narratives in terms of what your mindset was when you applied for the loan. I think that you want to put your best foot forward, but at the end of the day, I don't think it's going to, your forgiveness is going to be denied, or you're going to be asked to repay the loan. So
I agree with you, Paul. We don't want to make people concerned that this is they're trying to have some type of gotcha moment here with this form.
Right.
I think a lot of it is they're trying to gather data Again, it goes back to some of that optics. They want to be able to present some information in summary to the public, but just because your company happened to continue to perform well and you had a good cash position doesn't mean you're in any trouble here. Remember, the spirit of the program was to keep companies open and keep employees on payroll, and go back and document all that. Even if your cash position remained good, you have access to a line of credit, so what? I mean, that can always change overnight, as we saw the Great Recession. I mean, lines of credit got cut off quickly, things like that. So, there was a lot of uncertainty. Just document all that stuff, be prepared, and you'll be fine, I think is the message of the day.
Yeah.
With that, I know we're a bit over time, and Matt or Paul, any final comments? Obviously, we'll help people that contact us individually where we can, but anything else to add?
No, I'd just say, if there's anyone on the call that didn't get their question answered, please feel free to reach out. We'll do our best to answer, and we've been trying to be very diligent on responding and getting a quick turnaround for you. Just be patient. It may take us a little while, but we really try to get back to you as soon as we can.
Yeah, well said, Matt. And I don't have anything to add other than a big thank you for everybody that's taken time out of their day to listen to us. Hopefully it was time well spent. Hopefully you got the message we were trying to send. But if you do have concerns, as Matt said, don't hesitate to reach out to us, and we'll walk you through it. We'll talk you through it. So
we'll do our best.
That's right.
Awesome. Thanks, guys. And thank you for joining us for today's live broadcast, What We're Seeing and What We Know, PPP Loan Forgiveness Application Process, Necessity Form, and Tax Treatment. We hope that the team was able to provide you with some valuable insight. If you sign off today and realize that you have additional questions, like they said, you're always welcome to reach out to Matt, Paul, or Doug directly. You can also contact any of our RAID team members by checking out the People section of the firm's website at raidcpa.com. That's REA. Don't forget to watch your inbox for an evaluation survey, access to today's webinar, and more. Thank you for joining us, and have a great day.
Thanks.